In this video, I'm going to walk you guys through my playbook and how I use technical analysis to find high probability trade setups with very high win percentage. Honestly, if I was a beginner trader, I would have personally watched this video 10 times to engulf everything I will talk about in this video, because basically you get 5 years of experience and screen time condensed in a short YouTube video. It took me years to refine my playbook and get to this stage where I can just trust it, rely upon it, take high win rate, also known as playbook setups, and make good amount of money trading. And also there's a misconception that your trading playbook needs to be complicated. It's all BS. Social media has a thing for complicating simple strategies by using fancy phrases like ICT, FVG, SMC and all these phrases, so that the person who introduced these phrases can be like, I cracked the code to the market success, which is not the case. Personally, I don't know a lot about what these concepts are, but I saw a few videos online because of the hype. And when I started watching these videos, my first thought process was, it's the same shit I have been doing for the past 5 years, and it's the same shit that has been working in the stock market and all the markets for the past 20-30 years. And also you can perform this simple test. Any trader who has been trading for more than 5, 8 or maybe even 10 years, they won't talk about these concepts, because these concepts started becoming popular after 2020, after COVID, because we saw a rise in the retail traders. And people know that retail traders, most of the traders are lazy. They want just one concept so that they can rely upon it and make money from trading. And best believe, if something is working in the market makers and the algorithms, they know how to fake out those traders so that they can start making money. So it's not like you found the key to the market success, because the law keeps on changing and my playbook also changes every few months. Now I'm going to walk you guys through my playbook, but before we jump onto that, I want to mention that my playbook is basically trend trading playbook. I'm a trend trader. I like trading breakouts. So I don't like shorting at resistance. I don't like buying at support. Basically, I look for breakouts of resistance for upside, and I look for breakdowns of supports for downside. I basically never trade reversals. I'm a trend trader, but again, what might look like a reversal on the 5-minute chart might just be a consolidation or a trend trade on the higher time frames like the 1 hour and the 1-day chart. So basically, when I talk about trends, I'm looking for trends on the higher time frames, 1 hour chart and above. So here's my playbook, guys, and I'm breaking it down for free. And the only thing I ask in return is to like this video and subscribe to my channel, because similar to trading goals, my goal on social media on YouTube is to reach 100,000 subscribers by the end of this year, and you guys can help me reach that goal. So like this video, comment down below your favorite part about this video, and subscribe to my channel if you haven't already. And this app that I'm using is called Notion, Notion, and you guys can see I have a lot of trades recently in July and August. We had a lot of playbook setups, but when the market cools down, you guys can see we did not even have very few playbook setups, maybe not even one in May, or maybe I forgot to mark it. But April was a good month, June was a good month, May was a slow month. In July and August, we have seen a lot of playbook setups, and that's why I was able to make good amount of money in July and August. So it's not a coincidence. It's in my playbook. Like if I see these setups, I want to capitalize on these setups by increasing my position sizing. So what I'm going to do is that I'm going to walk you guys through 2 of these setups, because it's going to take a long time to break down each and every trade from here. So 2 examples is going to be like a good starting point for you guys to build upon. I'm going to give you guys Meta example because that is the most recent one, and I'm going to break down Tesla from one of these days, because Tesla recently had a crazy rally towards the upside, and basically it was giving a playbook setup twice or thrice in a week for 3 or 4 weeks straight up, and these are the opportunities we need to capitalize upon. Let's take a look at Meta. So Meta was a recent example, 21st of August 2024. Exchange was Nasdaq, because I don't like trading NYSE stocks, so I just want to note it down so that at the end of the year I can see like I don't have a lot of NYSE playbooks, so better to not to focus on NYSE stocks. Status for this trade was green. Setup was range, flags, triangles on higher time frames. Basically, I'm trading bull flags on higher time frames or daily range breakouts. Gap was inside, and if I click on here, you guys can see all my playbook setups: relative strength or weakness, continuation play, news catalyst, gap and go, exhaustion squeeze, 1-day gravestone doji is kind of exhaustion squeeze as well, high short float, again this happens once in a blue moon like GME squeeze or something. Inside day 1, 2, 3. So basically the top 5 or 6 setups are my playbook setups. And gap means, was the stock gapping up or gapping down on this day? It was an inside. So that means the stock was inside, was opening inside the prior day's range. Risk 0.5. So I'm an options trader. So this risk is based on the option. So for example, if my entry was at $3, the risk was $0.5 on the option premiums, and the reward was $4 on the option premiums. That means the risk to reward, the R multiple was $8, which is automatically calculated, because if I put in 3 right here, it's going to change to 6, right? So basically I'm dividing reward by risk to get R multiple. Game plan was A. My entry could have been better. It was not A, it was B. My exit was also B. RVOL started. RVOL means relative volume. It's a very important indicator that I use every single day. And if you guys want to know more about the indicators I use, I'm going to link a video towards the end of this video. So the volume, relative volume started out low, around 50%. It went to 100% plus. That means the volume on an average on that day was started out low, but once it started breaking towards the upside, the volume increased, which is what we want as a momentum and trend trader. The ATR, that means the average true range of this stock was $16, and on this day it moved $12.5 for the day. So it did not even move the ATR, which is pretty bad. But yeah, it's good to know that the ATR was $16, and in most cases, if the stock gets the volume, say for example, if the RVOL increased from 100 to 200%, it would have most likely moved the ATR for the day. So there's a direct correlation between how much volume the stock is getting and how much it can move on a daily basis. And average ATR is the average true range. That is your guide. If the volume is really high, the stock can move the ATR for the day from low to high of the day. And the playbook, was it a playbook setup? Basically, yes. Entry criteria. So this is the opening range break and retest. Simple strategy. I'm going to break it down once we scroll down. Exit criteria was 5 minutes green or red candle. So I added this exit criteria recently because I was taking my profits a bit too early in a lot of playbook setups. So if I see a playbook setups, I know how much to hold those setups and what is my exit criteria. It is like level to level. If it makes a new 5 minutes green or red candle, something like that. So everything is in there right here. Market cap was $1.3 trillion. Potential profit was $4,000. So this is basically calculated automatically based on a risk of $500, which keeps on changing. So I should actually update it. But yeah, so my risk is not like $500 every single trade, but it's basically like it calculates 500. So if I put in like if my risk was say $5,000, it's gonna change to $40,000, right? So basically you can change it based on the risk. I'm just gonna put it $500 for now. I don't want to change all the parameters on the playbook. Camera entry, you can ignore it because there's something I am trying to incorporate in my trading. Sometimes I feel like I should do it. Sometimes I don't do it. So yeah, I don't know a lot about this, so don't ask me about this. It's just something that I want to research more about. So let's scroll down now and you guys can see I have the 1 month chart. So basically on this setup, we can see on the 1 month chart, we had a bull flag on the 1 month chart, which is pretty good. As I mentioned, flag triangles on higher time frames. So basically Meta, I was watching this stock for the whole month of August because we closed like a red month in July, has a bull flag. So the month of August looks really good for a breakout towards the upside. Then on the weekly chart, same story. We had kind of an engulfing bar, big green bar, not engulfing, not the perfect example of engulfing. Big green bar, consolidation right here. And then again, looks good for a push towards the upside for the break of all-time high, which was 542.81. Then on the daily chart, we can see that Meta. So personally, when I take a screenshot of that time frame, I note down a few things that are key to note for the playbook. Inside range formed holding 530 to 531.5 zone as resistance. Breakout for upside is A+, daily range breakout, because the past 2-3 days, you guys can see right here, the high of this day, high of this day, high of this day as well, high of this day were right around 530 to 531 zone. So if we break out of this zone, the next level is 534. After that, we directly have 540. So it's good to know that it's a daily range breakout and it's a higher time frame flag on the weekly and the monthly chart. On the 1 hour chart, we can see that yes, we had consolidation days the past 2 days. We had an inside bar on this day. The next day, it just rallied off the open. So 1 hour chart also looks good. I'm going with the trend. As I mentioned on the 5 minute chart, this might look like a reversal. We had a push down, like a sell-off day. But on the higher time frames, it just looks like a trend trade. We are holding a trend consolidation for a push towards the upside. On the 15 minute chart, I don't use 15 minutes often. I just mark the screenshot right here, but you can see that on the 15 minute chart, it was a nice push towards the upside. On the 5 minute chart, it was basically a bull flag and the opening range break. For the first 10 minutes, we formed a range, we formed a high of the day, we formed a low of the day. The next candle, we had a red candle like a bull flag on very low volume. I entered my position right here. I took 50% of my position out a bit too early. That's the reason of the exit being B instead of A at the top of the playbook. Opening range break, bull flag break, whatever, you catch this push towards the upside, towards a push towards 540, which is a level to level trade, which I mentioned on the daily chart. The next level we had above 534 was 540, and it basically the high of the day was 439 something. Now the 1 minute chart, because I focus on the 1 minute chart for actually my entries and exits, I focus on the 5 minute chart, the 1 hour chart, the 1 day chart, the monthly chart, the weekly chart for the setups. But when I'm actually looking for my entries and exits, I focus on the 1 minute chart. So I saw that it was pretty choppy open, but on the 5 minutes chart, we were setting up like a bull flag on the 5 minutes. I showed you. I entered my position right here, opening range break. We had a bit of spike in the volume right here on this candle right here. So this is an opening range break, a break and retest right here for a push towards the upside, and the premiums moved more than 100% on this trade. So that is pretty much the playbook I have on Meta. If you guys want this template, there will be a link in the description box below. It's just a template without the trades because I want you guys to work on your own playbook. That will give you a good starting point. Even if you pay me $100,000, I won't give this playbook to you guys because it's useless to you. It's my playbook. I have the confidence in my playbook and still I hesitate. I chicken out of my trades. So if I hand over this playbook to you guys, you won't have the confidence on these trade setups to size up on and to make money. So the first step is to download the template, take the inspiration from my playbook, develop your own playbook, and then you will have the confidence to make money from trading based on your playbook. Now let's take another example. I don't want to take the same kind of example, range flags, triangles on higher time frames, Tesla earnings playlets, because I took no trades on this stock. So there's no point explaining this one, because if I miss out on a trade opportunity, I still note that trade down on my playbook so that the next time it shows up, similar kind of setup, I can capitalize on it. I think this is a good example, exhaustion squeeze. This is kind of a reversal trade, honestly. As I said, I don't trade reversals often, but exhaustion squeeze is kind of a reversal play because when the stock is extended a lot in one direction, usually the red candle followed by a lot of green candles can be a big red candle, or a green candle after a lot of red candles can be a really big green candle. So these are the only two scenarios. Exhaustion squeeze, I like to trade reversals. So let's take a look at Tesla from July 11th. So dates, the same thing again, exchange, NASDAQ, status was green trade, but I chickened out of this trade. This could have been a bigger trade than it was. I exited my position a bit too early, and that is the reason I have exit criteria now so that I can focus on this more moving forward. Setup was exhaustion squeeze, pretty straightforward. Gap was inside. Now you guys know this stock was actually holding inside the prior day's range. Risk 0.2, reward was 5. So that means you could have risked $0.2 on the option premiums and you could have made $5, which is a 25-hour multiple. Insane. And that's why these exhaustion squeezes, they don't show up often, but when they show up, the risk to reward is insanely high. Game plan was A, entry was A, exit, as I mentioned, I chickened out of this position, so exit was B for me. R-wall was 120, so the R-wall started out high, it went even higher as the day progressed. ATR was $12 and the daily range, the day range was $31, guys. As I mentioned, big like green candles followed by one big red candle causes a lot of panic, so the stock moves a lot of the daily range. Sometimes it can move through 2 or 3 times the ATR, and that is what happened on this day. The range of this stock on Tesla was $31 on that day, which is approximately 2.5 to 3 times the ATR. Insane. Playbook, yes. Entry criteria, VWAP false breakout and break at retest. VWAP is an indicator. Again, if you guys want to know more about the indicators I use, that video will be linked at the end of this video. Exit criteria, 1 minute doji, 5 minutes doji, 15 minute bar doji, whatever. Market cap was 700 billion. I like to note it down because the lower the market cap, the bigger the stock can move, the higher percentage the stock can move on a daily basis. For example, if you look at Apple, that is more than $3 trillion market cap company. To move that stock by one person, you need a lot of money. To move Tesla by one person, you don't need a lot of money. So that's why stocks with a bit more lower market cap, they can move a lot on an intraday basis. Again, now the penny stocks, they have a market cap of say less than $10 billion. They move a lot every single day because the market cap is fairly low. So you don't need a lot of money to move these stocks by 15, 20, 40% in one day. Potential profit on this day was 12,500, again, based on $500 of risk. Camel entry was like not applicable. So entries and exits. This is a screenshot of the option premium chart. This is my entry and exits on this stock. I entered right here. I entered 100 contracts. I exited right here. The premiums went from $2.6 to $6. My last exit was 6.6, but I had no reason to exit this position, guys. Like no reason to exit this position. This was a straight push down on the 5 minutes chart. The premiums went from 2.6 to basically $10. And that's why my exit is like I chickened out of this trade. My exit is B and not A. On the monthly chart, this was a God trend line on this stock. This trend line was holding for more than, it's still holding for more than 3 years now. Got rejected right here from the prior level. On the monthly chart, we can see that the stock is really extended from the moving averages. We had quite a run on this stock in the month of May, June, July, basically. On the 1-day chart, we can see how extended this stock is, guys, like grinding push towards the upside, but on this push up right here, the volume is going down. So that also means that the buying interest is slowly coming down every single day. One big red day, as I mentioned, exhaustion squeeze. A stock is extended a lot in one direction. It's very extended in one direction. One big red candle can wipe out 2 or 3 prior days, and that's what happened. It wiped out the gains from the prior 4 days. So these are the days you need to capitalize on. Even though it's not a trend trade, I'm not going with the trend, but I have a playbook called exhaustion squeeze. As I mentioned, I don't trade these setups often, but when they show up, that the risk to reward is worth it. On the 1-hour chart, we closed like a doji on the first 1-hour candle. On this day, we closed under the zone I was watching. On the 15-minute chart, we can see that we had the open, we grabbed the buyers, we sold off right here. So you can enter your position, you can add to your position to catch this push towards the downside. On the 5-minute chart, as I mentioned, we had a bit of buying right here, and that's why it's called exhaustion squeeze. That means the buyers got exhausted right here. We got the squeeze from the sellers. The buyers got squeezed by the sellers. Had a sell-off with increase in volume right here. Volume is going to be really important. On this push back up, we can see that the buying volume is dying down. You can enter your position right here because this blue line is the VWAP. VWAP false breakout. Then you can add to your position right here, which is a break and retest. This was the level that we formed intraday. Had a pullback to that level and then insane sell off. So I was able to catch this trade, but I covered my position basically towards the close of this candle. But yeah, it never gave a reason to exit your position based on the 5-minute chart. This is the exit criteria. The first green candle we made was after the break of 245. So basically it moved from 265 to 245. 20 points move on Tesla, you can practically triple your money on a trade like this. On the 1-minute chart, this can be the exit criteria, a doji on high volume, and based on the 5-minute chart, 5 minutes green candle can be the exit criteria. Again, like take your partials along the way, but this can be your ultimate profit target or exit criteria. That is pretty much it. But again, I can't walk you guys through each and everything in my playbook because then this video is going to be like a 40 minutes long video. But you guys can watch this video multiple times, take notes, look at the screenshots, look at what I mentioned, the notes on the screenshots, and then develop and work on your own playbook. So basically the price action is all here on playbook. And you can also argue that my playbook is a bit more skewed towards the positive side because in my playbook, I have only noted down the trades that actually worked out based on the playbook. There are a lot of trades where the price action looks like a playbook setup, but that trade doesn't work out. Yes, because you have to take losses, then your risk management needs to be on point. I am not saying that if you take these playbook setups, your win rate is going to be 100%. No, I also lose money. My win rate is not even close to 100%. On a good month, it's going to be 70%. On an average, it's going to be between 50 to 60%. But the thing is, if you catch one of these playbook setups, the risk to reward is very, very high. You make 8 times your risk. You make 25 times your risk. So one trade like this can cover for all the losses and eventually put you green for the year. And also I remember that we had a similar kind of playbook setup on NVDA, which was a playbook setup based on the price action, but because of my tape reading skills and the market depth, the screen time and my experience, I did not execute on that setup because I knew that it's a playbook setup based on the price action, but my intuition, my gut, my experience told me that it might not work out looking at the tape. So I did not take that setup. And that's what you get with screen time and experience. There's no replacement for that. Now, once you master the playbook, then comes the psychology part, because a lot of new beginner traders, since day one, they will be like, I need to fix my trading emotions. I face a lot of emotions when trading. I revenge trade, I overtrade. You overtrade because you don't have a well-defined strategy. So the first step is to work on a well-defined strategy and having a well-defined playbook. After that comes the emotions part. And for that, I got you covered. Watch this video to master your trading psychology. Like this video, subscribe to my channel before going, and I will see you guys in the next one.